Hi, I'm Kals, host of The Comparable, the series that covers the innovation shaping emerging markets, with each episode spotlighting two companies building similarly in two different places. For this episode 4, we're zooming in on digital payments, spotlighting two leading fintech players, Paystack in Nigeria and PayMongo in the Philippines. As digital commerce accelerates across emerging markets, companies like these are transforming how businesses and consumers transact, making payments faster, more secure, and more seamless than ever before. Paystack has become a major player in Nigeria and across Africa, powering online and in-person payments for hundreds of thousands of businesses. The Nigerian market is experiencing explosive growth. Digital wallet and prepaid card transactions are projected to reach $15.2 billion this year, fueled by a growing e-commerce sector, improved infrastructure, and a population that is increasingly shifting from being cash-based to cashless. On the other side of the world, PayMongo is leading the charge in the Philippines, enabling businesses of all sizes to accept payments through cards, e-wallets, and over-the-counter channels with developer-friendly APIs and seamless integrations. The Philippines' digital payments market is on a similar trajectory to Nigeria, expected to triple in size to $1.7 billion by 2033, driven by smartphone adoption, government support, and a similar shift away from cash. Both companies have attracted global attention, with Stripe, the US payments giant, playing a pivotal role. Stripe acquired Paystack in a landmark deal in 2020 to expand its African footprint, and is also a key investor in PayMongo, signaling the immense potential seen in these fast-growing markets. In this episode, we'll explore how Paystack and PayMongo are reshaping financial access, the challenges they have faced and continue to face, and the massive opportunities that lie ahead in two of the world's most exciting fintech frontiers. We'll sit down first with Paystack COO Amandine Lobel and PayMongo's CEO Jojo Malalas, and are later joined by Kola Aina of Ventures Platform and Sam Gibb of Resolution Ventures, who will share deeper investor insights about the companies and the markets we're spotlighting. Let's get into it. My guests today are both leading key payment players in Nigeria and the Philippines, with a similar vision to accelerate digital commerce and empower businesses across their respective regions. Amandine Lobel is the COO of Paystack, a fintech player that has revolutionized payments in Nigeria. Paystack launched in 2015 and gained traction in the market early on, raising its first seed round in 2016 after their acceptance into Y Combinator. And then in 2018, raised an $8 million Series A led by Stripe with participation from Visa, Tencent, and Y Combinator. In 2020, Paystack was acquired by Stripe for reportedly over $200 million, making it the largest startup acquisition in Nigeria to date. My other guest is leading a company across the world, but with a similar vision. Jojo Malalas is the CEO of PayMongo, a leading payments platform in the Philippines, providing a unified, user-friendly platform that integrates seamlessly with the way Filipino businesses sell. Like Paystack, PayMongo was also selected for Y Combinator in 2019, and also like Paystack, Stripe invested in their company, first participating in their $2.7 million seed round in 2019, and then leading their $12 million Series A. In 2022, PayMongo raised $31 million in Series B funding, and more recently have noted plans to expand across the region. Both companies have been known as the Stripe of their respective markets, but there's so much more nuance to their stories, and I'm so super excited to welcome Amandine and Jojo here today. You guys are both instrumental leaders of your respective companies. Amandine, COO of Paystack, Jojo, CEO of PayMongo. But interestingly, neither of you are the original founders of Paystack and PayMongo. Amandine, you were previously leading fintech investments at the IFC before joining Paystack and are considered instrumental in orchestrating the Stripe acquisition, according to things that I've read and seen online. And Jojo, you became CEO of PayMongo in February of 2023. And were previously a co-founder of GoTime Bank in the Philippines. Can you both share what brought you guys to be leaders at your respective companies today, and what do you feel that you inject into the vision and culture of the organization that is and was necessary at the time? So maybe we can go with Amandine first, and then Jojo, if that's okay.
I guess it was 2017. I was part of the fintech team with IFC, investing in global fintech startups across emerging markets. But my remit was really specifically focusing on Africa. And I had moved to Lagos sometime in late 2017 with IFC. But I realized as an investor, you kind of see different business models across the board, which is great, but you're always seeing things from the outside in. And what was happening in tech in Africa, I really wanted to be part of building and contributing to this movement from the inside out. And so at the back of my mind, I had kind of the desire to become an operator. I think another piece of information or an inflection point for me was, as an investor, you sit on boards, you tell founders how to run their business, but I had never actually run a business myself. And so even just to be a better investor, I wanted to get that operator experience. And when I thought of the 150 plus fintech CEOs I had met in Africa, Shola is the only one that I wanted to work with or learn from and build with at Paystack. And so it was kind of a natural evolution. I actually first met him to pitch IFC in case he ever needed to raise more money. This was actually after the Stripe-led Series A in 2018. And in return, I got what started off as a friendship and then very quickly led into a professional relationship, first kind of helping from behind the scenes and doing kind of some ad hoc consulting, and then transitioning to a full-time role. So that was the genesis of my start and my journey to Paystack. And I think once I joined Paystack, my role was very much focused on the company building side. So I think I probably had 3 different hats. One was just owning special projects or 10xing Shola or taking anything away from him or removing things from his plate. The second was investor relations, which is why I was so involved in the Stripe acquisition that started about a year after I joined. And before that, I had been leading board meetings or doing a lot of the investor relations work. And then the third piece was on the company building side, just really kind of spinning out different functions. The 2 co-founders were software engineers. We're a very product and engineering focused company. And in many ways, I was the first business leader. We had 1 person in finance, 1 person legal, 1 person in HR. And so in terms of incubating those functions, setting them up, hiring another leader from the outside to really own and setting that person up for success, empowering that person to do the best work of their lives, has in many ways been my responsibility.
I love that. And I also love just the idea of professionalizing the company in a way that positioned it for their acquisition, right? Which I think is so important, is like, how does a company evolve from being that kind of startup-y culture to like being a company that can really absorb and be ready for an acquisition? We'll talk a little bit more about what things look like post-acquisition, but I love that you mentioned all of those different levers and things that you brought in. Jojo, would love to hear from you because, you know, you obviously have been a fintech operator. You came into PayMongo more recently, you know, a couple of years ago. Would love to hear, you know, how that happened and what brought you to PayMongo.
Yeah, I wish I had the same track as Amandine in coming to a company that has founders who were going to work with her. But my PayMongo was quite a different one because I came in at the time that it was, you know, we were calling it an existential situation where 3 founders had left. Actually, 2 founders had left, and it was highlighted by the stepping down of the CEO co-founder because of some governance issues, some issues that basically were decided upon by the investors, together with the chairman, who was also a co-founder. And then mine was, they were I was also an investor. I was a VC. I was a CEO of a venture capital company that looked into PayMongo in its Series B. You know, we were ready to invest, except that there were a lot of information that this under 30 years old founders were not able to share with us. That's why we were not able to invest. And before we would have looked into other information, they have I think they've completed Series B. But immediately after Series B, about 8 months after Series B, this quote unquote scandal came up, and so they were in an existential situation. The investors talked to me, particularly Hedo Sofia, which was the lead investor for Series B, and then was asking me for help to look for a CEO initially. Maybe maybe a brief background. I was also the co-founder of a digital bank in the Philippines called GoTime. During that time, we just launched. And prior to that, I was a CEO of Wing Bank in Cambodia, where I ran it for about 3.5 years, from a microfinance company and converting it to a digital company. And in the Philippines, I was also an angel investor. I was a VC CEO. I was a fintech operator. So the experience was really something that PayMongo needed at that point to turn around the reputation of the company. Get the people out of this scandal thing, and then basically start fresh, right? So I was convinced to join, and I had to ask for permission from the owners of GoTime, where I am a shareholder also. So I came in as the adult in the room in PayMongo. The average age of PayMongo was about 27, of 245 people. But when I came in, 2 founders had left. When I came in, the third founder also left, even before I started. And he was a CTO. So you have a COO, you have a CEO, and a CTO who all left. And I was left with a co-founder who was a chairman and doing non-operational activity. So the challenge was, daunting because, I did not know how to start rebuilding. I did not know whether it was a rebuilding case. Because 85% of the organization were hired by 85% were hired by the 3 founders who had left. And so, my first my first 6 months was really, traumatic in a sense that I could sense the resistance. And the resistance is not coming from the employees per se, but the resistance is coming from, the ex-founders who probably did not like the idea that somebody outside is going to continue, building their company. So, you can see all tweets coming out relative to, founders run companies, not outsiders, and something like that. And you can also sense that from the organization. So, my first objective was to hire an HR head so that she can help me deal with changing the culture, right? And that was our key challenge for the next 2 years, to create a new culture. But I was not able to create a new culture because I was reliant on 85% of the people who were working 100% remote. And that was just coming from the pandemic. So, but my resolve is that just to make sure that the reputation of the company was intact. So, I use all my networks in the investment community, in the fintech community, where I am a leader also in some fintech associations. And I gathered all of them to show support for the company. I got really tried and tested directors to be part of our board. And then, I made a very, very good relationship with the regulator. So by doing that, there was some cleansing in a way, but my objective is that, the ghost of the past should not be part of the way forward, right? So the first year we were able to do well. We still grew. The company was already, the growth of the company was already declining. So first year, we still grew by about 40%. And all I did was clean up. We had 20,000 merchants, but about 13,000 merchants were doing 0 transactions for the past 3 years. LTV to CAC was 0.64. We were losing. Yeah, exactly. We were losing customers faster than we're acquiring them, right? So, but as the year went through, as we were trying to do this, and because I was able to bring in a lot of new partners, we were able to manage the revenue side, and we grew the revenues by about 40%. And also we were able to come up with the path to profitability, getting away from the growth. On year 2, we were able to grow it 2.5x because we were really focused on a lot of organizational changes, and at the same time focusing on merchants who are actually contributing more to us. So we grew our LTV to CAC ratio to about 8.4 from 0.64. And then, when I came in, our runway was about 24 months. That was February of 2023. End of 2024, we still had 24 months of runway. So, so we needed to create that type of, success, so that, we're back on track with being recognized by the country in terms of, doing our payment facilitation. And at the same time, we introduced new products and services where we led in some of them in wallets, we led in instant settlements. But that was just a start. It was just stabilizing it. 2025 is, really finding out, how can we sustain this while getting into some new stuff. And all throughout, my first criteria was that I wanted my investors to be active. And then, my first, the first thing that I did was that, when I had a chance to meet with Matt Yalowitz, who is a Stripe head, I made sure that I told him, you're not part of the board, but I need you to be active. I need undivided attention when, we give a call. And he offered that. So, I have conversations with Matt on a regular basis. I have conversations with Stripe of Asia Pacific on a regular basis. And then we continue to compare notes, and, they keep on helping us in terms of, new products, or at least giving us some inputs on how can we improve our products the Stripe way.
That is, wow, what a turnaround story. First of all, I mean, kind of amazing. It also kind of speaks to what I want to ask Amandine about as well, because I feel like, when I think about when you Google like PayMongo, when you Google Paystack, like you can read these media headlines, right? About like your Series B, or Jojo, what you were talking about with this scandal, quote unquote, of like allegations that were happening against PayMongo with Amandine. It was like thinking about the acquisition, right? It's like people read headlines, and I think we often freeze a company in time, right? Without thinking about the fact that there is so much that happens and that can be recovered. I think I'm so impressed, Jojo, by how you talked about how the first year was just about firefighting. It was kind of getting you back down to like how you fix the problem and then start rebuilding from there. And I've seen that with companies even in our portfolio, where you kind of just have to have the patience as an investor too. And I think because you've played multiple roles, and same with you, Amandine, you guys are kind of like recovering investors on the inside of these companies now. It's like you kind of have that perspective that I think is really important, coming into the companies that you're at. And Amandine, just to kind of go to you about the acquisition with Stripe and what happened in 2020, I think it's not that that's the end, right? Obviously, that's very much the beginning of a new chapter, but I think it was something that was widely celebrated across the continent as a win for both the Nigerian, but also the African fintech space as a whole. And would love for you to kind of share a little bit more about, what happened after, right? What happened as a result of the acquisition? How is Stripe being involved now, support and fuel what Paystack looks to achieve today? I know that you guys are very much still your own independent entity. So I'd love to understand also the dynamics of that.
I think it's important to start with just why the deal was done, and then go into what's happened since. So the first thing to note is that it was very much the continuation of an existing relationship. So Stripe had led our Series A in 2018. And then sometime in 2019, they had to decide, are we going into Africa ourselves? Is this going to become our Africa play? And I think just realizing how fragmented and difficult it is to do payments in Africa. Africa is the most fragmented payments ecosystem in the world. But then you have 17% of the global population is African, and only 2% of them are transacting online. The opportunity is still massive. And so recognizing that you can't really do Africa payments with all of the very different many channels, whether it's mobile money, bank transfers, cards is actually not even a dominant channel in some of our market, which is what Stripe is known for. You can't just build that from San Francisco. And so it was a question of deepening an existing relationship. I think when the conversation started about making this a full acquisition in 2019, early 2020, it was the fact that the two companies are very culturally aligned was very important. And then the two companies were very mission aligned as well. Stripe's mission is to grow the GDP of the internet. Our mission, we recently restated it last year, it's to power African ambition. But we're doing that by powering online payments as a first step. And so I think those were very important kind of tenets to the acquisition, and also informs the fact that we had a very autonomous and independent operating model. So from overnight, almost nothing changed, except for the shareholding structure. But our email addresses didn't change, our Slack didn't change, we didn't change our employment contracts or anything. The leadership team at all did not change. So no one left as a result of the acquisition, which is also not always the case. But that independence and autonomy was really critical to just ensuring that we were doing this the right way. That said, what has happened since, I think a few things have happened, and Stripe has just been an incredible partner in this journey over the last 5 years. One, I would say, is just talent exchange. So we've had maybe 6 Stripes that have come to do a secondment with Paystack. A lot of our leadership team has actually been, over the last 3-4 years, have been Stripes who have great experience, have seen what success looks like at a scale bigger than ours, and have been able to come and share that knowledge and lead, whether it's the legal work streams or the go-to-market work streams at Paystack. And that has been a really effective kind of up-leveling or knowledge exchange. So just the talent aspect. The second, I would say, is probably more on the go-to-market side. So Stripe has millions of merchants. A lot of those merchants want access to African customers. And we've been doing a lot of work to either refer Stripe customers to Paystack as kind of their preferred partner in Africa. We've also been doing some work to try to minimize the need to do subsequent integrations. So can they even leverage the fact that they're already a Stripe merchant and that Paystack is part of the Stripe group to just facilitate that entry into Africa? So that's more on the go-to-market side. And then maybe the third side is just kind of up-leveling some of our operational processes. So we've learned so much. I think what Jojo was referring to, we've just learned how to do things at scale in a much better way, whether it's just even something like closing our books, our accounts, our monthly reporting, the compliance, the KYC. We've just learned a lot by just being able to have access to, again, folks that have solved this at scale and at a complexity that is far greater than ours. And so I would say, like, those have been the main takeaways or the main benefits that have come to us over the last 5 years. But I agree with you. This was a very big deal, not just for Paystack or for Nigeria, but for the entire African ecosystem. I don't think I've ever received as many messages as the day that we announced the acquisition, because it was the first time that there was a Silicon Valley aspirational tech company that was buying a fully homegrown African company led by an African team. And that was really special. You know, from Cape Town to Cairo, people were celebrating because it was a massive win and a turning point in the evolution of the African tech ecosystem.
Jojo, for you, like, you were kind of touching on this with, that first year that you kind of took the reins at PayMongo, and, with Amandine also talking about how, professionalizing and coming in at Paystack, you kind of became that adult in the room, brought in other adults in the room with what you were building with PayMongo, and then started to turn things around slowly, right? To the point now where you said, you had 24 months of runway 2 years ago. Now it's still 24 months of runway, which I think speaks to the business and kind of building sustainability into it. But I'm curious, how there are other payments players in the Philippines. The fintech space, is quite, there's a lot happening there. So I'm curious for you, like, how do you guys, especially now that you're really kind of being able to focus on new things, focus on on what the future looks like. How do you guys create an edge in what you're building for, SMEs in the market, and what does the future look like for you guys?
I was not focusing a lot on me, what I can do better than the competitors. All I'm saying is, how do you build this and how do you sustain it? So we went from firefighting to just stabilizing the business. And then 2025, we start scaling. And this is where we needed the help of Stripe and the help of, some of our investors. PayMongo is very, very fortunate, maybe like Paystack, we are YC. But we had Peter Thiel, we have Justin Mateen, founder of Tinder, we have GFC, we have Hedo Sophia, we had Stripe as our investors. And if one of the main reasons, my personal reasons for taking this on, despite the fact that, I'm supposed to be retiring now, right? So, I've done all of this, but it pains me to see that a YC, Stripe, Peter Thiel, Head of Sophia, GFC invested company in the Philippines will suddenly go down because of the scandal, right? So one of the objectives that, for the Philippine community, let's try to do something and then turn this around. It's helping, right? So, but now what we realized is that when we go scale, it's a different ballgame altogether. When we started scaling, you said we grew 2.5, we will grow 4x this year. The first 3-4 months, we found out that, our systems will crash, given that, all of the customers are coming up. What we thought were very, very good products at this level is almost obsolete when you scale it at this level. And so we needed to, do a pit stop and then again, reassess in how we're going to do this. We still, what's in our mind is that, unlike Paystack, which was acquired, we still don't know our exit plan. Right? We still don't know where we're going to start thinking about our exit. So all we need to do right now is survive with whatever money that we have, and that's where we are now. It's still exciting, but it's a lot of work still. But we're very fortunate that Stripe is also supporting us with our business. We just closed a contract with Stripe and won some of their merchants in Latin America, wherein they will be bringing millions of services to the Philippines. Wherein we will be using alternative sources of funds to pay, alternative payment methods. And, that speaks well of this relationship with Stripe. And, I think, if we did not have this, I think maybe the definition of the future might be very, very difficult to do at this point.
Yeah, I'm excited to see what happens in the future for you guys. And then Dean, you were mentioning earlier that your vision now is, I think you said, fueling African ambition, and digital commerce is like one important lever for that. To kind of a similar question to what Jojo was just saying, you guys were focusing on, in 2023, you were focusing on expansion across African markets. You're solving a Pan-African problem, and I'm curious for you, like, given that regulatory frameworks are so different across, Africa is not a monolith. Africa is also not a country, despite what other people might think. And Nigeria is also just such a huge addressable market in and of itself. Like, what does expansion look like for you guys, and how are you thinking about what the future looks like for Paystack?
Yeah, no, it's a great question. And I definitely think we're at an inflection point. And it's one of the reasons why we restated our mission. So Paystack is going to be 10 in January. I think we've made a lot of progress in the last 10 years. Today, we are live, licensed, fully operational, boots on the ground in Nigeria, Ghana, South Africa, Kenya. We're piloting in Cote d'Ivoire. We're piloting in Egypt. And so there's been a lot of progress. I think to your point on Nigeria and that addressable market, it's still our dominant market. I think it will always be our home market. The potential and the depth of that market is huge, and it has also grown significantly over the last 10 years. So to put it into context, what we process on a monthly basis is more than 50x what Nigeria as a country was processing on a monthly basis when we started. So there's been a lot of growth in digital payments. It's been actually a very exciting forum to be part of, or an arena to be part of, and to be playing a role in just making it easier for businesses to transact and to accept money from their customers. I think as soon as you can move to digital payments, you can do business 24/7. You can accept payments from anywhere at any time. And just being able to transition from just 9 to 5 in person to that is a massive unlock, which was a big part of the mission and why we actually started what we're doing. I think in many ways, if we get our jobs right, people should still be using Paystack in 100 years' time, because we are literally the foundation for economic growth on the continent. But to come back to your question on where I see expansion, I think there are multiple dimensions to the payment spectrum. I think historically we've been very focused on online merchant acquiring. So that's B2B, it's online and it's acquiring and mostly in fiat, right? Just local currency, acquiring and local currency settlements. I think there's so much more that can be done within the payment spectrum. And when you think of our mission as powering African ambition, it means that there's a consumer element, which is something that we've started playing with in the last year or so. We've started building a consumer product. There's in-person payments. Even though we talk about digital payments, a lot of businesses want to be able to accept omni-channel and just have a one-stop shop for all of their payment acceptance. So there's a lot of work for the offline segment that we've been doing. Stripe is talking a lot about AI and stable coins at the moment, and we're also working with one of their portfolio companies, Bridge, just to see how we can facilitate some of that in Africa, because I think stablecoins will have a massive unlock for the continent in terms of just facilitating cross-border flows. If you think of programmable money, which is what stablecoins are, it just unlocks a lot of the friction that we currently experience. So I think our mission is it's still supportive of the initial reason that we started building Paystack 10 years ago, but there are almost different chapters of the evolution. I think you can either think of digital payments as just powering payments within one country, which is probably where we started, just Nigerian merchants being able to accept Naira, be settled in Naira. But as we progress, there's a lot more we can unlock. So not just within a country, but then across the continent is the next phase. It should be as easy for a Nigerian merchant to accept M-Pesa from a Kenyan customer. So just across the region and making those 54 borders feel not like strict borders, but and exactly more porous. And then the third leg is just how can we connect kind of Africa to the rest of the world. And that's some of the work that we're also doing with the Stripe team. So there's a lot for us to do. I think in many ways, we're still just scratching the surface, but it's all within the mission of just trying to power African ambition. Whether you're a merchant, whether you're a consumer, we want to be able to power African ambition.
Very cool. Thank you for that. And as a last question for both of you, and maybe let's just make it a super quick answer, but I think it's a great way to end, right? Because I think, so many times, like for a long time, payment players in emerging markets, SafePay in our portfolio included, you guys have all been kind of dubbed the Stripe of X. And obviously Stripe's a core investor, a key investor, acquirer for you guys as well. But I think it's interesting when we think about like, as you build for the nuances of these markets, you become so much more than the Stripe of, right? It becomes like kind of built for the nuances and the hardships and the obstacles that are quite unique for where you guys are in the world. And I'm curious about like, if you guys were to answer, what is the hardest part about building in your markets, or what is the nuance that's often missed by outside investors when looking at you? What would you say that is?
Maybe Amandine can resonate and probably share this. There's a point when you talk about a vision, which is to have the Stripe vision is always on the internet economy. They would like to have an influence and an impact on the internet economy, right? And I think in the Philippines is the same, but the impact that we should have in the Philippines through payments is always focused on how much of this impact can really move the Philippines out of the emerging market status from lower middle income to upper middle income type of classification. And we think that our main customer really is the SME, which basically drives the entire economy. So we continue focusing on those. Behind that objective of harnessing. We're in the business not of payments, but we're in the business of making SMEs succeed and continue to grow. And therefore, we need to constantly come up with products and services that will help them do that. It's not only payments. So now we've developed capital, which is also coming from Stripe, which is our ability to lend to our merchants so that we can continuously fuel their businesses. We have also started partnerships with key startups in the Philippines. which is the Stripe model, and basically partnering with invoicing companies, partnering with accounting companies, so that we were able to extend our activities a little bit further. But dealing with SMEs is probably the most telling, because it's behavioral, right? You lend money, for example, to our merchants, and once they have the money, before they even use it for their business, the brother gets sick, you need to pay for his hospitalization bill. The son needs to, pay for his tuition fees to finish his studies. The wife is celebrating her birthday. Before you even spend all of the money that was lent to you, you already spent, half of it before you're able to grow the business. So we try to address that by coming up with, a different type of lending, which you're calling capital, wherein we lend only to those whose willingness to pay is paramount because their business is growing. So that, I think, is the something that we discovered. And then when you try to solve that problem, you now try to take a look at your capability to solve that problem. And you're also finding out that the tech stack that you have in solving previous problems needs to be improved, because you're now trying to focus on all of these new impactful solutions for your merchants. The other part is really regulatory, and there is a reason why Stripe is not in the Philippines. There is a reason why Stripe is not in Indonesia. There is a reason why Stripe is not in other countries. So that's something that we're trying to be more accustomed to, so that in a way that we're familiar with that, we're able to bring in a model with Stripe, which is what we're starting to do now. But yeah, sometimes they call it a lonely battle, during all of this. But we're fortunate that all our partners, Stripe included, and even our investors are all in support for us. But I think they're in support of us, and I still feel that, because I still have a runway, right? But as I move forward and then try to be deliberate on my intention to scale, I know that this runway is going to get thinner and thinner, and so I have to really be and that's the biggest nuance that I need to manage from at what point should I really focus on being self-sustaining, rather than bringing myself to a point of having to raise money just to continue sustaining the business, right? So and that's probably the multi-million question.
Thanks, Jojo. I think there are some similar themes for sure, just because I think building in emerging markets is hard. Building companies is hard, but with emerging markets, there's just an additional layer. A few things for me that I would say have been challenging. One, there are things that are within our control, and there are things that are not within our control. Things that are not within our control, I'd say one is the macro situation, particularly in Nigeria. There's been a massive devaluation of the Nigerian naira. When I started working at Paystack, the naira was closer to 300 or 350 to the dollar. Today it's 1500, 1600. And a lot of that devaluation happened in the last 2-3 years, almost overnight. And so that just has many downwind implications for us, or downstream implications for us, including just our business model. And do we really need to prioritize hiring in market, or just finding the best talent regardless of where they live? So when you think of the fact that a lot of our revenue is generated in naira, in cedis, in rands, in shillings, but all of those emerging market currencies can be quite volatile, it makes it very hard to have fixed costs that are not denominated in the same currencies. So that is definitely a challenge that we've had to build around on the macro side. I think another thing that is less within our control, but how we react to it is within our control, is just changing consumer preferences. So I mentioned that cards is not necessarily a dominant payment channel for online payments. That's changed drastically in Nigeria in the last few years. When we started, we only had card payments, and we've had to evolve our product offering, the services that we deliver, as consumer preferences have changed. So bank transfers in Nigeria, I would say, is now the dominant channel for payments, both in person and online. And so just making sure that we're staying up with evolving consumer preferences is probably the second challenge. The third one ties to what Jojo was saying around regulatory. So we operate in probably the most regulated space. We also operate in a space where the regulator continues to provide or to push updates on how businesses should be operating. Businesses like ours should be operating. And there's also a lot of people changes on the regulatory side. So even if you build a relationship with a certain team, you need to make sure that you're actually continuing to build those relationships as the teams evolve. So as there are regime changes. So that is something that we really need to factor into how we go about building our business and just managing kind of regulatory stakeholder relationships. And then maybe the fourth, so each of these challenges are actually our opportunities once we're able to solve them.
I think a quote that I listened to recently at a conference where they talked about entrepreneurs in emerging markets, that they're not just creating, but they have to create the conditions to create, resonates so much with what you guys have been saying, right? It's not, we're all like literally and figuratively building the road in front of us and our sectors, and have to be the advocates for policy and with the regulator, right? I want to thank you both so much for, first of all, the candor that you guys had. I think having this really great conversation where we talked really honestly about the challenges of building, and seeing what you guys are doing is so exciting and also so inspiring. And I'm sure will be so inspiring to the people listening to this podcast. So thank you guys so much for being part of it. Welcome back. This is a segment we call Investor Insights, where we sit down with the key investors involved in the companies and the markets we highlight each episode. We'll cover the market opportunity and challenges, and also delve into some interesting insights and takeaways about both Paystack and PayMongo. With me today, I have Kola Aina, founding partner at Ventures Platform, an early stage discovery venture capital fund championing the next generation of African entrepreneurs. Ventures Platform invested in Paystack early in their journey, and he's seen the company through their growth and acquisition. My other guest is Sam Gibb, principal at Resolution Ventures, a fund that invests in early stage fintech companies in Southeast Asia. While Sam is not an investor in PayMongo, he has a deep network and understanding of the Asia Pacific payments ecosystem, and his insights will bring a lot more depth into our spotlight with PayMongo. Welcome to you both. My first question is going to be for Kola. Ventures Platform invested in Paystack during their seed round, which closed in December 2016, right after their stint at Y Combinator. Since then, the company has become one of Nigeria's major payments players and was acquired by Stripe in 2020 for a reported over $200 million. Hindsight is always 2020, but I'd love for you, Kola, to take us back to when you first invested in the company. What were the factors that led you to invest in Paystack to begin with? And how were you guys as a fund supportive of the founders through their journey to and after the acquisition?
You know, when I met Shola in 2016, I was running my enterprise software business that builds ERP solutions and different sort of digital platforms for companies. And the biggest sort of gap that our companies had was a payment integration, right? You know, so we'll build everything and we'll then have to sort of figure out a way to generate a voucher that we can take to a bank or what have you. And so, you know, the instant, you know, I met Shola, I got it, because this was a problem looking for a solution. And I think the other part as well was Shola was such a genuine person that knew more than I knew about what he was building, which is always attractive. And so, yeah, you know, it was a quick decision. And his pitch then was, look, we can help a business collect payments online in 30 minutes, right? We invested. Paystack processes over 5,000x of what it processed when we invested. And to give you a percentage of the scale of e-payments in Nigeria, you know, e-payments every year exceeds $1.4 trillion US. You know, Paystack is, you know, processes a large chunk of that. And so it's been an incredible journey, supporting them, you know, with business development and regulatory support all through the exit, and still sort of working together today. I guess a full circle moment was when Shola, the CEO of Paystack, then invested as an LP in our fund, and you know, last year we announced a joint investment in another fintech. And so, you know, the Paystack has really been a sort of marker of success for our ecosystem. When that exit happened in 2020, it did incredible things in terms of sort of showing that we could take a company from founding to exits. And I think I give all that credits to Shola, Ezra, Amandine, and the rest of the team that's built just an incredible company that really helped catalyze our ecosystem.
I think that's great. Thank you for sharing all of that. Sam, you're not a direct investor in PayMongo, but you've invested in a payments player in Indonesia, and you're a longtime fintech investor in Southeast Asia. How do you see PayMongo's growth over the past few years, especially as it compares to other payments players in the Philippines, but also compared to other players in the region?
So it's one of those situations where the rising tide lifts all boats. In the Philippines, you're seeing the e-payments for retail transactions go from about 20% penetration to over 50% now. So it's been a big focus area for the regulator in the Philippines, and PayMongo's really benefited from that. But moreover, just speaking about PayMongo's trajectory, obviously it was a bit bumpier kind of 3-4 years ago. Then Jojo came in, and since then they're really focused on the things that were important. So enabling the instant payouts and embedded finance APIs, just like the key kind of bread and butter solutions that they need to have for their main customers. But then also, because of where the Philippines is and the amount of remittances to the Philippines, they've also focused on that side as well, which would be a bit different from other similar companies in other countries in the region too, where it's not as big of a opportunity. But then one thing that is particularly present in most fintech companies or most early stage companies that I've seen or worked with in the region is needing to have a focus on profitability. And that's something that Jojo brought to the table relatively early. So ensuring that the business could actually sustain itself. You know, they raised some capital, had 24 months of runway. They've still got 24 months of runway. And it looks like they'll be heading towards profitability by the end of the year. So they've really capitalized on turning up the volume and also getting the margins right too, which I think can be easily overlooked in a larger and more liquid market, but has been done really well with PayMongo.
Yeah, and this isn't really a liquid market as much anymore in Southeast Asia. And I'm curious, just off of that, this is a little off the script, but how important is it? I mean, you're invested in an Indonesian payments player. Obviously, Southeast Asia, people look at the region as, each market is so different, but it is important to think about potential scale across. Like, how important is, if a payments player is in the Philippines, how important is it for them to scale outside of Southeast Asia to capture more market share? How important is that for a player?
When you start to operate in multiple different jurisdictions in Southeast Asia, it definitely becomes a lot more complex because we've got over a dozen different countries, cultures, and regulations that you've got to deal with. So from a scalability perspective, it becomes very difficult because you might not get the same leverage from the compliance team per se or public policy team because you're dealing with different regulators in each country. So there's two ways as an investor. There's two ways that I'd look at this. First of all, is it a global company that's being built in Southeast Asia, or is it something that's specifically solving a Southeast Asian problem where that market's large enough in itself? And for these payments companies, I think that's the case.
Mm-hmm. Like going deep into one market is actually what you should be doing.
There's still so many problems that need to be solved because there's so many payment solutions that are required for each of the different countries. Like your credit card penetrations, low single digits in most of the region, right, except for Singapore. So you find you're more reliant on e-wallets or just even trying to get people to move from cash to some form of digital cash, right? And then you also have to be able to provide those payment solutions. So whether that's teaming up with local convenience stores to enable people to pay there and provide those services, or other very specific solutions. So there's still a lot to just be done in each different country.
Yeah, and it's the same. And Kola, you were nodding, so I'm assuming this is the same for Africa. And obviously, Africa is not a monolith. I'd love to hear your comments on that.
Yeah, I think we're seeing two playbooks play out on the continent. You do have lots of need for debt in various markets, and so we've seen, for instance, where we have some exposure to MoneyPoint, and MoneyPoint has achieved unicorn status by largely being mostly a Nigerian focused business, right? And so there's that going deep in one market. Paystack, that's the topic of today's conversation, has employees in 4 countries. The last time I checked, as processing payments in South Africa, Ghana, and other parts of the continent. But we're seeing a new playbook that I think is really interesting, which is what I call the E2E expansion, where companies are going from one emerging market to another. So an example in our portfolio will be Lemfi, for instance, that's now kind of expanded out to Pakistan, actually, and China and India. So look, I think at the right level of maturity, we are seeing some companies, including Paystack, become regional or multi-continental players, actually. And I think it's great because, African startups shouldn't only build companies for Africa. We can build global champions, and it's great to see a couple of companies lead in that regard.
I want to shift gears a little bit. Last question for you both. We're kind of on this a little bit, but what do you think outside investors to your regions get wrong about fintech in your respective markets? And how do you, I think let's address that, but also if we were to think about this and leave on a high note, is like, where do you see the payment space evolving and growing in your regions? Like, what's kind of the future? So let's start first with what people get wrong, and then maybe we'll end on a high note of like, where is the opportunity? And so maybe we can go with Sam first, and then Kola.
Yeah, so I already touched on what people get wrong, and that's viewing it as Kola said, like a monolith, thinking about it as one entity when it's not. It's small, and also a lot of the companies here are small and they face different challenges than what businesses are solving for in North America or Europe. Where I see like fintech and payments generally going, one thing I'm quite excited about is with Stripe's acquisition of Bridge and the provision of e-wallets and also stable coins to be able to transfer money relatively quickly and cheaply cross-border, because there is a massive amount of cross-border trade that's done in Southeast Asia. This isn't like the Americas where, if you're dealing in South America, you're probably still dealing in US dollars anyway, or in Europe, most business cross-border is going to be done in euros. Here, you've got a lot of different currencies that have to transact all the time. And so I think making that a lot smoother is going to create a lot more opportunity. And specifically, I've got a couple of companies in the portfolio that would like to be working with people in the surrounding region and be able to make relatively small payouts to them on a regular basis. But with the current infrastructure, that's really difficult and expensive. When you're dealing with stable coins, to be able to move that money cross-border and then an e-wallet to off-ramp it and get it to that person relatively quickly. So even if they're unbanked or underbanked, then being able to give them access to that e-wallet to get access to that cash, it's actually really meaningful. $3 to $5 a day is very meaningful for something, for someone in India per se, maybe not in a developed market, but it just creates a lot more economic opportunity for more people. So that's what I'm quite excited about.
Yeah, and hedging against the currency risk that happens with all the fluctuations in our markets, right? Kola, you're smiling. I feel like all of us are like, stable coins, so hot right now.
I hate that I have to go next because I was going to actually share how excited I am about stable coins because, our markets are not too dissimilar in terms of the challenges that they face. And so no surprises there that we're also bullish about what stable coins represents, both from a cross-border payment standpoint, but even as basic as company employee expense cards and all of that. That's really still very unsolved properly for lots of African businesses. I think stablecoins presents really a huge opportunity for the next frontier of what fintech could be like across the continent. In terms of sort of what outside investors get wrong about fintech in the region, I'll probably say 3 things. I think the first really is a lack of context. I remember very vividly trying to explain what MoneyPoint was doing, or trying to explain what Paystack was doing with virtual accounts to investors, US investors, and they just couldn't connect, because they lacked the context. And I think that's very much the fintech opportunities that will scale in certain markets will be very local, will be solving very unique challenges, and would not look like what fintech looks like elsewhere. I think that the second thing is it's really tough to invest in Africa as a briefcase investor, flying in and flying out. And so you're better served, collaborating with local partners, local fund managers that understand the nuances, the regulatory landscapes and landmines. And I think the third bit is, I said it in the beginning and I'm going to end with it as well, is that Africa is not a country, right? It's not a monolith. Every region's different, and your portfolio company that's been very successful in Nigeria is not just going to automatically scale to even just Ghana that's next door. It's the nuances are different and the approach sometimes are very different. But overall, super excited for the future of fintech 3.0, particularly with what stablecoin represents, and super excited to be a part of it.
Very cool. Thank you both so much for being here today. This was such an interesting conversation, and I feel like we don't often get investors from different regions having such a similar conversation, but it kind of speaks to the thesis of this podcast. So thank you guys both so much for joining us. Wrap on episode 4. Thanks so much for tuning in, and stay tuned for future episodes that drop every 3 weeks, wherever you listen to your podcast. See you next time. Bye.